Good weekend to all. It's Adil bringing you a review of the US markets from an inter-market analysis perspective, and good weekend to you all. Okay, so we have made new highs with regards to US markets, and let's try and understand what's happening here and whether or not these highs will continue, and whether or not this market has legs, etc., etc., because a lot of people are obviously asking with regards to US markets, is it a short squeeze, i.e. a fake out, or is it a true breakout? Okay, so the bullish argument with regards to the US markets right now, okay, we have moved higher based on what? Hopium with regards to a Greece deal, hopium with regards to a Russia-Ukraine peace deal. That's not exactly a catalyst for a market to propel itself higher, especially when it's faced with the USD JPY and Euro JPY falling. So therefore there's a divergence, therefore there's no confirmation of the breakout higher. If the USD JPY had obviously propelled higher along with the S&P 500, then I would have certainly added weight, or certainly added weight to the argument that the markets are bullish. Then we have concerns, because as we all know, the three currencies that generally tend to move higher when there's uncertainty with regards to the market, and obviously the Japanese yen is one of them. So if you have the yen moving higher and the USD JPY moving lower and the Euro JPY moving lower, it's risk off, especially when there's been such a strong convergence and a positive one with regards to the USD JPY and the S&P 500. So given the fact that the markets are diverging and S&P is making new highs, it's very confusing, especially given the fact that you've got uncertainty regarding Greece. We still don't know exactly what's happening there. Okay, yes, there is the possible explanation that individuals have inside information and they believe, according to their sources, that a deal will certainly be struck, so therefore they're front running that information. Yes, okay, I'm open to that. Then we have the deal with regards to Russia and Ukraine, and the markets obviously pricing in peace and tranquility between Russia and the US, which obviously I can't see that happening at all, the way things have escalated. Okay, and the sanctions are certainly there, and I can't see the Russians backing off at all, especially after their economy has suffered quite substantially and have remained patient till this day. So certainly, and given the fact that just over the weekend the battle rages on, and the pro-Russian rebels and the Ukrainian soldiers are certainly fighting one another, and the peace treaty is certainly in jeopardy. Okay, so and given the fact that Mr. the Varoufakis, who has said explicitly that they want a debt haircut regardless. Okay, so again, that's at loggerheads with Germany's position with regards to no debt haircut. So I can't see any resolution being obviously being found there, and again, that's certainly circumspect. Adding the fact that you had weaker economic data out the US, which I've posted in my previous video. There was a weak economic data that came out of the US, so again, that's bearish from my perspective. So overall, given the fact that we've had several Fed members all being hawkish, okay, regardless of the weak data, I can't see any real reason why the markets will be propelling higher. Very, very strange from my perspective. Okay, so let's have a look at the actual technical setups. First of all, I would like to start off with the Nasdaq. Okay, so is this Nasdaq a true breakout or is it a fake out? Now, the only way we can find that out is by looking at the accompanied indices, and the accompanied indices are the Nasdaq Biotech. We have a H&S formation ever since we've broken out of this diagonal trend line. Okay, we've put in a hanging man, we've put in a doji candle, and we're into that right shoulder. Provided you hold a 75% fib, which I expect to hold and test in this blue-purple trend line, then this H&S formation certainly is valid, and we're looking for a break lower. Okay, adding the fact that we've got that's the biotechs, by the way, the semicons. Let me just bring up the chart of the semiconductors, give you a better understanding. Bear with me. Not sure where my semiconductor indices have gone now. Is it down here? Oh, there we are. Okay, so semiconductors. Okay, we were holding that resistance there, and we were into gap fill resistance, but we have diagonal trendline resistance. So you have resistance there, and then you have resistance here. So again, there's no real breakout. So until, from my perspective, I mean, I expect that gap fill to hold. Obviously the market's gone in the opposite direction based on whatever the understanding which I've explained earlier with regards to the hopium, with regards to Russia concerns or geopolitical concerns easing on this deal, which again is under jeopardy over the weekend. So this is a potential fake out. Until I see a breakout of this level here at 96 on the semicons, and I see a breakout there on the biotechs, until then I will remain bearish on the Nasdaq. That's my bias. Okay, now let's see if I can verify that and confirm that with alternative indices. Bring up the Dow. Okay, the Dow is into horizontal resistance, as you can see here, and the volume itself has been quite lackluster. Again, 60-minute chart, we are thrusting higher. On a 10-minute chart, we're obviously thrusting higher. So again, we're looking at that 10.830 to 18.030, 18.040, which really smells of a potential short squeeze around that 18,000 level, given the fact that we've got lack of follow through. Okay, so again, we'll certainly take that into consideration, and we can verify that with the Dow Transport. So let's bring the chart of the Dow Transportation. Not sure why my indices are all everywhere today. Okay, so Dow Transports, again, we're into that 75% resistance, so we're into that diagonal trendline resistance. So there's no real move higher on the Dow Transports. That's confirming the move in the Nasdaq. So again, circumspect, okay, circumspect with regards to the markets. Now S&P 500, let's bring up the S&P 500, and let's have a look at the technical pattern there as well. Okie dokie, right, so let's bring up the S&P 500, the daily chart. As you can see, we're into that double top resistance in that 2093 region. Look at the 60-minute chart, certainly continues to thrust higher, but again, we're into that double top resistance. Now, late Friday, light volume, etc., obviously they were going to knock out stops just above and create that short squeeze going into Friday. So again, interesting scenario, very interesting scenario. We still have the unfilled gap below. Now let's verify that with the actual IWM, so given the fact that we have the Russell 2000, okay, so again, Russell 2000 isn't exactly bursting higher, isn't exactly breaking out of resistance, isn't exactly showing us real conviction with regards to the market itself. So the S&P 500 certainly is, and that's mainly due to the price of oil potentially moving higher. So again, no real conviction from my perspective. If the IWM was obviously breaking out this 89 level, bursting into the 91, then obviously we had argument for it to go higher than one could say, but this very moment in time, nothing whatsoever. So again, certainly circumspect from my perspective. No real thrust or no real conviction with regards to the IWM. So that's all I'm going to say with regards to that. Okay, so just bear that in mind. All I can do is use that trend line for now. Obviously we have this resistance up here, that's certainly holding. Go to a 60-minute chart, and you can see again with that double top resistance. 10-minute chart, we have that unfilled gap below down here. Again, that's going to remain open. That certainly bodes interesting, or certainly is interesting going into the session. Okay, so here we go. Okay, so we've had a breakdown, and obviously the market's propelled and moved higher in the opposite direction. So the resistance up here, obviously we broke through it. Now we'll see whether or not we can get conviction above it as well. So that's going to be very interesting. Okay, but again, remember the gap level just below. It's going to be very, very interesting to see if we breach that or not. Okay, that's basically what we're looking for. Okay, so unfilled gap below. So the gaps have been left on the US indices. Now the other one I generally tend to look at is the Wiltshire 5000, so let me just bring that up as well. One that's been told by Anna Cooling to certainly observe and verify and corroborate. So again, that is making a new high. So interesting scenario. Now at this very moment in time, from a technical perspective, given the fact that the Russian Wiltshire is certainly making a new high, one can argue on price action basis alone. Yes, we have pushed higher on US indices, but then the argument on the basis of fundamentals is the fact that we have uncertainty regarding Greece, we have obviously uncertainty regarding this Russian-Ukraine deal, then we have uncertainty regarding the rate rise, or well, not uncertainty, it's more certainty, but basically fear of rate rises, and again that's potentially negative for US markets given the fact that the cost of capital rises. Okay, so all these factors put together are certainly bearish. So again, this move here is potentially a fake out. So again, that move here is a fake out. Also, S&P 500 is a fake out. Now, if you look at the Russell 2000, again, like I said, there's no real conviction on a daily chart for it to obviously propel higher. I'd like more of a bullish momentum from the IWM to really give me conviction for the obviously the markets to move higher. Now, don't get me wrong, I'm not going to obviously embed myself in the bearish side of the market and obviously keep fighting the market. What I will say is this, is that on the European indices we have H&S formations. Now, Europe is probably the only real Kool-Aid variable left. Now, obviously Japan has decided to pause, and that's why you're seeing a sharp sell-off in the USD JPY and Euro JPY as well. That obviously a risk-off scenario. So the divergence between the USD JPY and Euro JPY and the S&P 500, certainly one of them is Pinocchio. Okay, so either your USD JPY is Pinocchio, or the Euro JPY or the S&P 500 is Pinocchio. So again, I'm open to that as well. So if this market continues its move higher, and the Wiltshire continues its move higher, and the IWM moves higher, the Dow moves higher, the Nasdaq moves higher, this pattern here on the biotechs fails, so this H&S formation and the 75% fails to hold. If the semiconductors obviously continue to propel higher as well, as you can see here, if we break this here, this key level here, then that basically negates all resistance, and the interpretation of the markets is basically we don't care about rate rises. It's considered to be bullish because it signifies a stronger dollar. Stronger dollar they portray as strength and demand for the US dollar, and given the fact that from a fundamental perspective a strong dollar generally signifies a stronger economy, etc., etc., even though the economic data, as we see on Friday, was actually bearish. I mean, if you look at the well, I've already covered this on the European indices, but the data that came out on Friday was bearish. I mean, if you look at the well, it's bearish for the markets because you had, this is next week's, wait me 1 second, so this week that came out, so let's go to Friday and just look at the economic data. I mean, that doesn't support a move higher. I mean, Michigan's consumer sentiment lower than expected. Okay, the import prices higher than expected, so that means inflation is rising, therefore rate rises are to occur, and obviously that means that rate rises get pushed forward. Higher interest rates hurts growth and obviously raises capital costs. Then we had several over the last 24 hours we've had Fed members all talking about a rate rise. Okay, so again, hawkish monetary policy, therefore bearish. Okay, so again, bearish overall. Okay, overall bearish. So that's basically how we interpret the market in terms of it being bullish or bearish. Now, yes, we had stronger data out of Europe, but again, one could argue that's certainly priced in given the fact that DAX is at 11,000 and we've already had a double top after the economic data. So if you look at the German DAX, for example, which I've already covered this, I mean, if you look at the 60-minute chart of the German DAX, I mean, like I said, I have covered this, and you've got a double top even after the economic data was released. So that obviously indicates to you, given the fact that we've got a double top and now we've got a potential for a H&S formation on the 10-minute chart and a double top on the 60-minute chart, that indicates to you that obviously was more or less priced into the market, and given the fact that you've got uncertainty regarding Greece, and that's going to dominate proceedings. Now, the other argument for the bullish side on the S&P 500 and the US markets is that it doesn't really care about Greece. Greece is totally irrelevant. Okay, what's more relevant is tapering fears, tapering concerns, or should I say rate rise concerns. Now that tapering is obviously into full effect, rate rise concerns that will dictate, and obviously US economic data. Now, whether or not the markets perceive the weak data on Friday as being bullish for the markets, because that means rate rises will be pushed back, again, that's open to multiple interpretation as well. If I see a concerted effort pass on the semiconductors, and if I see a move higher on the biotechs, which confirms the Nasdaq being a breakout, and the S&P 500 and the IWM confirming that move as well, the Wiltshire continue to move higher, then I will be more than willing to shift my bias and obviously go towards the bullish side. Okay. Again, it's all about oil, which I've already discussed and taken into consideration as well. So going into Monday, the oil price, if I bring up a chart of Brent, you can see that it's into resistance. If I bring up a chart of crude oil, you can clearly see that there's a H&S formation there now.
which I've already discussed. Again, so that given the fact that the S&P moved higher on a higher oil price, then this obviously indicates that this is going to move lower on a lower oil price. Okay, so again, take that into consideration. You can see that on the 10-minute chart and the 60-minute chart, and we are into that resistance zone as well. So if oil is into resistance, USD JPY, Euro JPY are obviously moving lower. If you bring up the chart, the USD JPY, you can see a sell-off here, and that sell-off has not been supported with a sell-off in the S&P 500, which is very strange, which I've explained the divergence there. So if that was moving together, then I would say yes. I mean, you can clearly see that there's a HNS formation now on the USD JPY as well. So you've got a left shoulder there, you've got your head obviously that's been put in, we're creating the right shoulder here and looking to move lower, given the fact that there's no more stimulus coming out of Japan. So again, given the fact that the euro is moving higher, sterling moving higher, yen moving higher, so given the fact that Nikkei was down as well on Friday, the Nikkei and the S&P tend to move in together. Again, there's a divergence there. So the move higher has a lot of fundamental concerns. Okay, hence the reason why I'm not in the bullish camp at this very juncture. Now, I've already released or put out a video on Europe which explains the bearish side with regards to the markets falling. Given the fact that Europe generally tends to dictate now, given the fact that the QE is all coming from Europe. No more Kool-Aid from Japan. All the Kool-Aid is from Europe. So the European markets should dictate global markets worldwide. And if they're weak, then I expect the US markets to be weak as well. Okay, folks, I think that wraps it up. Again, I'm flexible. Like I said, watch out for those resistance levels. If they break, then I'll be more than happy to shift buy. So until then, I'm staying in the bearish camp. And again, Asian markets will dictate. Remember, I am already short the Euro stocks and the FTSE going into Friday, so I'll declare my bias. As you can see, is already bearish, and I'm expecting the gap lower on the European indices to close, and that should technically push down the US markets as well, especially with the USD JPY lower and the weak economic data that came out on Friday. Okay, risk off and risk on, wax on and wax off. Goodbye now.